The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach we go, dear friends. And, of course, we meet every day at this time.
The following takes place between 2 p.m. and 3 p.m.
And, well, you know, what can we say? Completely vapor volume, but that's been the last, 2 weeks. A declining spiral of volume, 2.2 billion shares as we start the show on the New York Consolidated Tape. And we're up 13 points. So we'll have to see, but it looks to me like we're going to probably be a little lighter than yesterday, where we actually got a little bit more volume on the downside. Not enough to make me go out there. But as I said yesterday, I don't see right now at the moment a lot of reason to be jumping all over the market. I might add some positions later in the day. We'll have to see how the volume comes in. There probably isn't a lot of upside, and probably a good chance we're going higher, but not very much higher. And, of course, there's a small chance that we go lower, but it will be much, much lower. So asymmetrically, when you put your position in, what should it be? And I always love that part in Fooled by Randomness, where Nassim Taleb takes on Jimmy Rogers. And Jimmy Rogers said, well, you know, I can't buy options because 80% of the time options expire out of the money. And that's all good and well, but he never understood, or Jimmy Rogers, for a guy that went fairly far, never understood the payout compared to failing. If I had 1 in 10 chance of winning the Powerball tonight, I think I'd go ahead and take those odds. You may have to lose a lot, kind of like Babe Ruth. He was the biggest home run hitter ever, and also the biggest strikeout king ever. And that's what happened. Of course, in a day or times when many baseball players were earning $1,500 to $2,000 a year, by being the strikeout king, he was making $120,000 a year. And that asymmetric return is something that is extremely hard for many people in the stock market to figure out. And a lot of people do not like being wrong. I don't mind being wrong if I know that I'm on the way to a giant payout when I am right, and an asymmetrical payout. If you could be right just half the time, but make 4 times what you lose when you're wrong, a pretty much easy way to go to the next palace of your dreams out there. Anyway, we're up 12 points on the S&P cash. There is no significant volume coming off of those Fed minutes that came out at the top of the hour. We're just 2.3 billion shares now. Light and variable trading is at hand. And the question is, if this market does not get moving fast enough, how do I move my office to the dog park so I can just host my show from there? We need to kind of kick the tires on this thing and get it moving before I start nodding off. But we'll move. You know, we've got 10 points, so I guess there is some. I'm just kind of jaded. I love the huge swings we've had before. And like all things, those don't last forever. I was just hoping they would. And again, you know, we're up 10 points on the S&P cash. I don't know if you can say a great deal more than that. We're off 15 cents on the dollar index at 94.51. We've been up to 95, down to 94.24. So we're kind of about, two-thirds to the downside off the high. And it continues to look a great deal like the Treasury is all over the dollar, and we are in that competitive devaluation spiral. The question is the Treasury big enough to keep the wolves away from the door? The reason I asked that is I was talking to my deep inside source, guy I traded with a whole bunch, who ended up going to work in a Forex factory somewhere, Forex mine somewhere in Chicago. And he says I could not use his name. But I did talk to him, and he says as bad as everybody was long the dollar at the highs, everybody is now short the dollar at the lows. And you have to wonder if everybody isn't too far on one side of the ship if anything really big happens. Anyway, bouncing around, we'll watch that dollar index. 93.30, I think, is the last big major low on the dollar index. But there are a lot of huge positions right around this mid 94 level on the continuous contract. And that is from, I don't remember the guy's name from CNBC. That I'll think of it here in a minute. When will the Treasury run out of juice? What else do we have going on out here? Well, I think we need to get this party started.
That it's all just a little bit of history repeating.
On this day in 1928, James Watson was born in Chicago. He would later come to be one of the two gentlemen credited for figuring out DNA. In 1917, in an emergency session, U.S. Congress formally declared war against Germany. And in the stock market on this day in 1988, the Standard & Poor's 500 stock index is overhauled. Instead of being made up of 400 industrial stocks, 40 utilities, 40 financials, and 20 transports, it is allowed to float. One of the first things I did in looking at past data was around 1998 or 1999. I started looking at some of the stuff that people started to tell me. I noticed a huge change in the way that the S&P reacted. I didn't know at the time that it had been reconstituted in 1988. It was pretty apparent from the data. But a lot of people want to compare very, very long time frames and the way that stocks acted in the past. One of the things you need to know is how would you correct it? What kind of contact lens do you need to put on to make that chart right before 1988? We've had other kinds of changes in the S&P 500 since then. And just a word of warning, if you go back too far, are you actually comparing apples to apples or apples to oranges or orange juice? Just a word of warning. That's pretty much it. This is one quiet market, and I don't know what else we can say about it other than that. Give me a call, 877-927-6648. We will get into some charts fairly early. There are some out here making some signals. The market just is not cooperating quite yet. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Some fun stuff in the den. You can always, I think there's a 30-day free trial of it. You can always go in there and check it out, but it gives me something to comment on. And, of course, we have some emails here that we'll get to during the show. You can email me at path@tfnn.com. It's going to be a quiet day, so make sure and give me a phone call at 877-927-6648 or post a message in the den. We've got a few things to catch up from yesterday, but we'll get it all in. There's some interesting moves in the market, even if the market seems to be rather stuck. And probably the most interesting to me out here, at least at the moment, is when some words of softness in the Chinese market are coming to win. It's off 2.5%. Not that big a deal. To me, the bigger deal is this thing is really kind of cracked with volume underneath the 9-day moving average. And before, it's just popped right back into that. We're going into expiration today. Today is the day that everybody in option market maker land goes delta neutral. If you're new to the show, what that means is the risk reward becomes rather poor if you're an option market maker. And what you do is you either go long or short the other side of your bet and just let the premium decay out. But you basically structure long and short equity sides of the market so that you cannot lose whatever you have. Let's say that you've got a 3 or 4 or 5%. Let's say you got 3% move in the market. You just take the opposite side of that with the equity, or you can get into some other long-term puts and calls outside this month. There's a variety of ways to do it, but it pretty much is dependent on them moving the market around a little bit so they can get in and out of positions. So they'll tend to push the market down a little bit, push the market up a bit, and then by the end of the day, I'll be able to, in fact, about tonight, I'll get my data around 8 o'clock tonight, and we'll look through it, and I'll see what the market makers actually think that they are doing. But my guess is that we're going to see a little bit more weakness for those stocks that have to do with third world and China. When resorts, like I said, down, volume is kind of picking up here and has from yesterday to today, as we've broken under the 9-day moving average on this one. One more pull above it and then a close below it, and I think that you could have a fairly significant pullback, and that may take you back to this sign of strength, which is on the 12th of February. And what's the high of the day? About $70, a little under $70 out there. You've got a gap, and that looks like probably where you would want to buy this thing on a retrace, at least now. Valero, another one of these stocks that is broke down. We talked a great deal about stocks closing above and below 9-day moving averages and double repo patterns. This one didn't really do it, but it does show exactly what I'm looking at. I've written a new scanner to go back and look at a great deal of these patterns, and I've been putting them in the newsletter in the morning of the last week. But there are a lot of stocks out here that have been going up on very light volume, just a little bit each day, but no real sign of strength, and in fact, a couple of signs of weakness. Valero is down today, starting to pick up some volume. What you are looking at for volume today is about 9.8 million shares. That goes back to the 18th of March. You want that to be under that today. And you've got about, let's call it 6 million so far. So you could get exactly back into that. Just a 50% retracement, though, on that would take you back to 59.72. You basically are at the 382 retracement right now off this move of $52.55. But a lot of moves right off the bottom here with literally no retracements at all. And a lot of people just acting like retracements are something that used to happen in a market in a galaxy far, far away. But not so much. Harley-Davidson down on significant volume. There was some kind of paper news out here today. This is the prime example of a double repo pattern. I did not catch it. I don't know why I was looking at it and didn't really figure it out. I think I saw it this morning. I didn't anticipate it. I think I looked at it last night, and I thought, well, maybe a couple more days and this thing will do it. But it's exactly what you're looking for. In fact, this stock had been going up since the 17th of February, and you had a couple of days, which is about what you're looking for. You're looking for 2-3 days underneath where it really doesn't even touch the 9-day or the 3x3 displaced moving average, and then goes back up higher, and the next close below is where you want to snag this thing. It didn't really give me an opportunity to get in, but this is a fairly firm break, and of course, you've got very decent volume of 7.6 million shares already today in Harley-Davidson, and going into summer, that's kind of a bad sign out here that you would think that sales are going to be up. It's summertime. People buying a lot of hogs out there to go ride around and make lots of noise and not go very fast. I did the other opposite side. Didn't make a lot of noise, but I went really fast. Anyway, a great deal of these patterns have developed, and we're seeing a few of these things actually kind of just fall out of bed as they have today. So keep an eye on that. As I got to keep an eye on a couple of things that I'm looking at. So just to keep an eye on them. Okay, we are good. What else is out here? Cree Research. I had done, back when the stock was about $65, $66, had done a lot of research on this particular company. We were short in the Tech Insider for the fundamental reason that their technology would become commoditized over time. And these guys make LED light bulbs, basically. And we went through how a company called Plessey had figured out a way around some of the patents, but also was going to make the LED modules for light bulbs so much cheaper than Cree could. One of the reasons was, I don't know if you remember the company with Apple that was making the, not the silicon, but the, I'm having a mental blank now, the equivalent of the glass on a Rolex watch. Oh, Sapphire. That's what I got. GT Advanced. Thanks, Z in the Den. Sapphire crystal for it. And all the LEDs at one time literally had to be put on this substrate. But the substrate was about for a 13-inch die that you put all these LED lights on. And maybe you get 1,000 of these things off of a 13-inch platter. But a 13-inch platter for Sapphire was about $700 at the time when Cree was all the way up the highs. And of course, you could buy silicon-based platters for about $60. So it was about 1/10 the price. Plessy had figured it out. Everybody had figured it out. Cree probably headed to the dustbin.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. 2.45 billion shares on the New York Consolidated Tape. So volume is, unless something drastically changes in the last 30 minutes of the day, probably going to come in at about 3.3 billion for the day. To a breakout of that 2065 level on the cash, you're probably looking at about 4.7 to 5.2 billion shares is what I would find acceptable, depending if you want to be conservative or if you're ultra bullish. So if you're ultra bullish, you might accept 4.8 billion shares. But again, like I said, 3.3 billion shares. And that's it. Okay, what else do we have going on here? We got other movers out here, not huge ones. I did have a nice email, and you can email me too. Dan from Clearwater says, is this a great example of a double repo pattern setting up? And this is UGI Corporation. I don't know what these guys do. Let's find out about it. And the answer is yes. I maybe this is in my database because I did not see this one, but we'll look at it. A distributor stores, transports, and markets energy products and related services in the United States. It distributes propane primarily to 2 million residential, commercial, motor fuel, agricultural, and wholesale customers in 50 states. And the answer is absolutely a resolving yes. This is exactly what you're looking for. This thing literally started off up this path on the 28th of January. It is now closed below that 9-day moving average. You get a couple more days and a test of probably into this bar of April 1st. You get light volume. It closes back below that level. And these are a lot of the stocks that should have some fairly decent returns on these stocks because they are in a mania phase. And I think maybe that's the best way to describe this double repo pattern is literally there are no retracements in these things. Everybody just runs them right up and keeps going up. And the blue sky effect of manic depressives. Of course, we were depressed in January. Now we're manic and can't believe the market can pull back even a little bit on anything, crude, everything, commodities. There's no retracements available. I don't chase those. It's kind of a tough bet to not saying there's going to be a retrace. When you see something like this and see 25, 30 days on a stock like this, you really want to keep an eye on it. But the only thing I've found is to wait for this thing to close back above that level. And if you want to take an option position, you have to anticipate it because exactly what happened in Harley-Davidson happens a great deal. If you want to do an equity position, the only way that risk reward works out is if you wait for that close and some kind of sign of weakness underneath that. But yeah, there are a lot of these stocks that are going to have fairly decent retracements. And, this one, just a 50% retracement would take you to $36.28. I like the setup, but it is not complete. One more close above that line and the next close below it. If you got back up there with, say, like 500, 700,000 shares up around that, near that 4106, I'd be pulling the trigger on maybe some puts if they were available and a close below the line, and you could take it as an equity trade. But in mania phases, and probably the reason this pattern works out so well is it spots mania phases, and, it's not beyond the scope of reason that these things pop right back up and continue going up sometimes. And it's probably the best pattern to actually say, hey, finally, the mania is over and reality is going to slap them like a big wet fish from Monty Python in the side of the face. So thanks, Dan from Clearwater. He's not from Lutz at all. What else do we have out here? I think there was something going on out here with Cummings International. This one's pretty much done its little dance out here. And looks to me like Confluence would take this back to $100.15 to $99.29. Volume, not all that exciting now, but, you're only at 105. And if you are thinking that this market is going to do nothing but go higher, you want to look at the stock when it comes back to 99.29, or maybe just a hair under 100. It may be one of these stocks that just gets down there for a second, pops back up. I think it was some kind of downgrade today, something else. The choo-choos out here, it was one of these choo-choos that didn't look so good earlier today. I don't know what's happened to them. Looks like maybe they're a little, just kind of coming off of it. I don't see a great deal of momentum in this one yet, but I've been watching it. It's been kind of going sideways for a while, and I thought maybe it would be under distribution. Monsanto, one of the stocks that many people in the den love to hate, as the people in the GMO crosshairs are. The only thing I can ever think of as Monsanto is, of course, growing up in the 70s and at my high school, all the addicts and stoners had bought the Monsanto T-shirts that say, "Without chemicals, life itself would be impossible." That's how you knew they were stoner. They'd wear those shirts quite regularly. Anyway, this one is headed back down. You've got a previous low on higher volume. That is the March 4th low at $83.73. Today we got down to $86.35. So what do we got? About 250, 275, something like that. There isn't a great deal of volume, 2.5 million shares. As long as this continues to be like, better living through chemicals, As long as this continues to be light, kind of a nice setup for a bigger trading range. You got to like that it did have higher volume on March 18th out here. But to me, I don't see a great deal out here. It says that this is anything other than a trading range from the high 83s to the high 93s. So keep an eye on that. MSM, Industries Direct Company, is another one of these stocks where you can see how these patterns just literally fall apart once they close below the 9-day moving average. Now, this is one of the ones I like a little bit better. You had a big move down. You wait for these things to come back up above those and give you a good signal to fail, and then start looking back at high volume lows to go back and figure out where these things are moving. In this case, there's a big high volume day that goes back to February 4th, and that is at 65.74. So you got about $5. So if this sets back up, pulls back above that 9-day moving average, maybe it gets back up 74.75 and just has no volume, the next pull down gives you a pretty nice move of about $10 to the downside. We'll be back in a minute. Make sure and email me like Dan from Clearwater and some others. Had a question about CRM. We'll talk about them and catch up from our conversation yesterday. And you can continue to email me or call me, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite should occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We're going to look at Momo out here. And what a better name for a stock than a Chinese stock that you can't really figure out what they're doing at all. And I don't know what else you could say about it other than that. What else is going on? Why is Momo spiking today? Alibaba affiliates join the group seeking to buy out the Beijing-based social network. So kind of the Facebook of China out here. Huge volume, by the way. This thing is going back up to the December 24th high. That was $16.59, 1.4 million shares. We got 10 times that already at 14 million shares on a possible buyout. Question is, even if you're in China, I wonder if you get to actually look at the real books of any Chinese company. But kind of hard to say. Anyway, kind of a nice little movement out here for this today. Keep an eye on this over the next couple of days. There are a lot of shenanigans going on in China right now, and I would not be surprised if this stock was highly short in it. But the actual pattern would have been a fairly decent buy pattern. That is, you can have had, I would have liked to seen a better candle on the 23rd of February, but you did have a nice gap up. It had some volume. I wish it had a little bit more of a price move than it did. It went up to 1472. You came back down. You had very light volume, 1.4 million shares on April 1st. And, compare that to a bounce on 6.9 million shares. That's exactly what you're looking for. I don't think anybody could have anticipated the buyout on this, but that is the pattern that Wyckoff set up almost 100 years ago, probably 100 years ago now. What else do we have out here? Shire. All I can think of with Shire, of course, is the movies with the guys with the hairy little feet. Let's find out. Biotech company, together with its subsidiaries, engages in the research, development, license, manufacture, marketing, distribution, and sale of medicines for patients with rare diseases. Anyway, nice little pop on this one. And again, huge volume the last couple of days. Kind of funny this thing went and did nothing on volume yesterday. Maybe somebody knew something. You never know. Of course, the last high that this got into was the January 13th high. This spiked into it. You also had kind of a gap down with about 8 million shares, which is what you have about now. Back on the 11th of January when this came down. The one downside to this is I kind of have to dislike this did not test the February 11th low, and actually had more volume on March 16th. So more than likely a trade range setting up from this 190 today down to about that 150 level. So keep an eye on it if this market does turn. Saratepa Therapeutics up on volume back into this horrible day it had on the 15th of January, where it gapped down on 17.5 million shares. I tried to get into it with 7 million shares on the 21st. Today, it looks like maybe it'll get a little bit more than that. But still, this are a lot of people in here dying to get their cash back from this January 15th slam down steel cage match where this thing was body slammed. I got a few references in there. A few people asking me to add a little color to the commentary. So we'll give a little WWF there. TSRO, another one out here on a day where there isn't a lot of movement, up on volume so far today. Tereso, hopefully I'm saying that right. I don't hear anybody on CNBC talk a lot about this particular company and pronunciation. An oncology-based biopharmaceutical company. Of course, the IBB is actually up. We talked about it probably, 8-10 days ago. It looked like the biotechs had finally started to try to make some kind of low. Not that one that I was going to buy, but it looked to me like you were probably staying a little too long to the party if you were trying to remain short at that. Probably all the bad news is in until April 29th. In fact, let me take a look at that. What day is that? That's a Friday, the end of this month. My guess is that you do not want to be in biotechs on that day. That's because they're going to be making a lot of these biotech people do the perp walk in Congress. So if you are playing the biotechs, make sure and write down the 29th of this month as the month that you want to stand back. Not saying that they're going down, but probably going to be a tough sell when they are being crucified in front of Congress in a election year. Okay. Tesoro? Huh. Good. Thanks, somebody in the den. JRP. Okay. Tesoro. Okay. Eventually, one of these people. I like a lot of the web pages now have little buttons where you can click, and if the pronunciation's not plain, it actually has a human saying these words. I think some of these companies where you're not quite sure should have a little button on their websites so you know exactly how to pronounce it. STZ, Constellation Brands, trying to do its breakout dance out here, trying to do its happy dance. It needs just a little bit more volume. It's going through the January 7th high of 154.31. It had 4.6 million shares. Looks like you're going to get there, but man, I like to see at least 150% of the volume when you break out, not just tie it on a lot of these stocks, and especially in a trending market that's trending pretty much to boredom. You like to see a sign of strength. So maybe we get that before the end of the day, but you want to be watching the volume on Constellation Brands. Is it a legitimate breakout? It's certainly a gap, not a huge candle out here after the gap, and certainly not monstrous volume just yet. We were talking about how markets move and what the Fed has wanted, and I actually kept a interview from Hilarion, and I think this goes back, maybe I'll look it up because I saved it because I knew eventually that I knew then that he was right. But I had a feeling that even though I played it back then, it's just a 30-second clip. But it's pretty illuminating about exactly what the Fed wants and what it's doing. And I think they've kind of gotten what they have asked for. And Alarian, we'll talk about that when we come back in the closing segment of the show. Still have plenty of time to give me a call at 877-927-6648. Email me at path@tfnn.com, and we'll look at CRM before the end of the show.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. I wanted to just play this from Alarian because we are in such a tight trading range. I think it is illustrative of what a lot of people believe. I mean, we're up 10 points today, but we were down 10 points yesterday. We were up 10 points the day before and then down 10 points. And it seems like we're in a maddening loop. But I think this is by design. And this was about 8 months ago.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous, right?
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry
don't like
about
down days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
And I don't know. I think as I think about the way that the markets are set up, I think that's exactly what it is. We've got the Fed out there jawboning, moving what they can. We've got the Treasury acting in league with them. And I think the whole thing was to basically tamp this market down. And I think they may have gotten what they wanted. The problem I see is that it is like the proverbial kid with his fingers in the dike. All that potential energy is back there, and it only grows as the dam weakens. And eventually the market will become bigger than the Fed and bigger than the Treasury. The question is, point of failure is sometimes very hard to figure out. And that's what we're looking for. When would that fail if what they're working, the medicine does not work? And of course, we've endured now about 6 years of chemotherapy from the market. And I see a lot of people that are on the lower economic rails saying, hey, what's in this for me? You've transferred huge amounts of wealth to the through almost incredibly low interest rates to all these billionaires. What have you done for me lately? I can understand the zeitgeist of a lot of unhappy folks out there. Bristol Myers Squibb. And what else can you happen out here? This thing's going up against its March 9th high, and about almost 7 million shares that day, 66.68. We went through it, spiked through it today, just at 4.3 million shares today. Energy was only about a tenth less on the way back up. But again, as far as I can tell, a lot of these stocks that are in these trading ranges don't look like they've got enough juice to break out to the upside. We are penetrating several of them, like we are in BMY. And these do have some kind of high volume lows and volume down at the lows, which is March 17th, 6.9 million shares. You know, you bounced up the next day on 17 million shares, but I still want to see, you know, normally within a few days, that maybe a week or two, that low tested, and then see these riding back up to know that we are not just in a trading range, but in a new bull market. We did not get that. While you don't always get it, it's something I do look for. To MSN, SRPT, did we look at that one? SRPT. So, yep, we looked at that one, and we looked at WIN, and we're out of time. Oh, CRM. Take a quick look. We were talking about all the companies in the cloud space, and we really left them out. I'll get to it tomorrow. I will write a note down and seal it in a Funk and Wagnall's jar and put it on my porch. See you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.